Well, on the first day of trading for global equity markets, US markets have lifted pretty strongly, lifting around 2.5% to 3% in some cases, and continues on the big variances we are seeing between days. But the increases we have seen on the first day of trading this week really come about as a follow-on from what we saw towards the end of last week, as well as a follow-on from the central bankers meeting that was in Jackson Hole held on Friday. Now, the US Federal Reserve Chairman did indicate that he still feels pretty confident about a US economic recovery, and this was somewhat backed up by a bit of economic data out of the US today, suggesting that consumer spending lifted quite strongly over the past month, with consumers dipping into their savings packages to get out and spend a little bit more. So the more appetite that we've seen for risk in the market over the past day or two has also lifted the New Zealand dollar against the US. We are picking that the Kiwi will continue to strengthen, but early on Tuesday morning we have lifted and we're trading around 84.60 against the US dollar. Well, the local New Zealand Stock Exchange has been going pretty well over the past couple of weeks, with some major announcements coming from our biggest companies. But on Monday, several companies announced losses, and this wasn't quite up to what we have been seeing over the past couple of weeks. The first one was PGG Wrightson. They announced a loss, and looking through some of these items, they actually had a reasonable result, but they have been impacted by some pretty big restructuring costs and changes. There's probably no company here in New Zealand that has been impacted as much as PGG Wrightson's over the past 12 months. So they've seen write-downs in their wool business, also made a provision to some money going out to Silver Fern Farms, and they've also looked at some restructuring costs. Of course, 50% of that company was sold to Chinese interests over the past 12 months. All of these things have impacted on their profits. The second company was Goodman Fielder, and Goodman's gives us a pretty good idea of how consumers are spending, particularly on food items in this part of the world. And they announced a pretty big loss. They've really suffered because consumers in this part of the world are really deciding to save a little bit of money, downgrading to some slightly cheaper alternatives, particularly in the bakery and also in the dairy business. Now, this has impacted on their profitability, but also suggests that consumers are squealing a little bit at the high price of food at the moment.